Hi everyone, good morning again, and I would want to welcome you all for another exclusive webinar from HDFC Securities. Good morning again. So the topic that we'll be covering today is NPS, which is National Pension System. So as you all must be aware that now it is the taxation, as the taxation season is getting nearer. So now is the time when each one of us would want to save taxes, would want to invest in instruments which would save taxes, so that the taxes that we pay to the government would be a little less. Now, what is NPS and how is NPS different from the other tax saving instrument that we have already in the market? Now, why do we need to take NPS? So the key takeaways from today's topic that we'll be taking away is how NPS is beneficial as a tax saving product. How is it different from the other tax saving products? What is the exclusive tax benefits that NPS offers? Plus, what are the taxable liquidity that NPS offers? Plus, what are the withdrawal options available in NPS? To give you a quick brief about NPS, NPS was introduced on 1st of January 2004. So it was introduced on 1st of January 2004 by state and central government employees only. So it is a government of India product. So it was introduced in 1st of January 2004 for state and central government employees only. So later in 2009, NPS was made open to each and every Indian citizen. So each and every Indian citizen aging between 18 to 60 was eligible to open an NPS account. Again, in the month of November 2017, that age bracket was increased to 65. So as of now, any Indian citizen aging between 18 to 65 can and is eligible to open an NPS account. Now, what are the exclusive tax benefit that NPS offers? So the beautification or the uniqueness about NPS is the only product right now, or the investment product right now in the market, which gives you tax benefits over and above the ATC limit. Now, how does that happen? Now, so I just quickly would want 2 seconds. I'll just tell you that two variants of NPS. First is an individual NPS. Second is a corporate NPS. So as I mentioned, NPS was introduced on 2004. It came into existence for each and every Indian citizen in 2009 as a all citizen model, or an individual NPS was launched for each and every Indian citizen. Later, the powers and the functionalities to an NPS was given to PFRDA, which is Pension Fund Regulatory and Development Authority of India. So what PFRDA did is to attract more audience, or to attract a larger chunk of the population into NPS. PFRDA came in with a corporate model in the year 2012. So what happened in a corporate model was license were given to financial institutions, banks, broking firms to do a tie-up with the corporates and open their employees NPS account, which would be considered as corporate NPS. Now, what is the benefit of having NPS as a retirement investment option, which would also fetch you great tax benefits? As I mentioned, NPS is the only product right now in the market which gives you tax benefits over and above the ATC limit. Now, how does that happen? So that would be covered in this slide, the types of contribution. So for example, if you're a salaried human being, and if you're working in a corporate, and if your employer has a NPS tied up with any of the POPs, which are called as the point of presence, with any of the POPs currently in the market. For example, if you're an employee of a company X, and that company X has a tie-up with, let's take an example, with HDFC Securities for their employees NPS account. So what happens here is, as an employee, you are eligible to get a tax benefit. You're eligible, or you have the opportunity to invest up to 10% of whatever is your basic salary, and that same amount that you invest in a financial year gets exempted over and above the ATC limit under section 80CCD2. So what does this mean? In simple language, if there is an employee who wants to invest in NPS, that employee has the opportunity to invest up to 10% of whatever is their basic salary. Supposingly, if I am the employee and my employer has already enrolled into corporate NPS, and if my basic salary is 5 lakhs per annum, I have the opportunity to invest 10% of that entire 5 lakhs. So 50,000 is the amount that I would be investing into my NPS through my corporate. That's the reason this is called as employer's contribution. So what happens here is the amount would be deducted, would be from your salary. The employer will deduct it from your salary, and the same amount would be credited back into your NPS account through your employer. So that is the amount that would be invested into your NPS account through your corporate. The contributions would happen from your employer side, which they will be deducting it from your salary and would be investing back into the NPS account. Here you get, suppose like if you take the example of 5 lakhs, so you've invested 50,000, and the same 50,000 you can avail a tax benefit for that entire financial year under section 80CCD2 over and above the ATC limit. That's the first tax benefit that you get. Once that contribution is done and you've availed the maximum tax benefit of 10% of your basic salary, if there is an employee who feels that he or she wants to avail more tax benefit, now in this case an employee from their individual capacity can invest into NPS and gain up to a tax benefit of 50,000 rupees under section 80CCD 1B. Again, this would be over and above the ATC limit. This is the only difference that would be between a corporate NPS and an individual NPS. So if you have a corporate NPS account, you get the opportunity to avail both the tax benefits, which is the contribution that would happen from your salaries part, which would be considered as employer's contribution. Plus, if you want to avail additional tax benefit, you can invest from your individual capacity as well, and you can gain a tax benefit of up to 50,000 rupees under the corporate NPS scheme. Now, if your employer is not investing into NPS, then how can you invest into NPS and how can you avail a tax benefit? Now, if your employer is not investing, is not registered under the NPS umbrella or under the NPS scheme, and if you want to avail, if you want to open an NPS account to avail tax benefit, the subscriber or that individual can open an individual NPS account and can start contributing towards his or her own NPS account and gain up to a tax benefit of 50,000 rupees in a financial year. Again, this would be over and above the ATC limit. So that's the only difference between a corporate NPS and an individual NPS account. Under the corporate NPS account, as an employee or as a subscriber of NPS, you get the opportunity to invest up to 10% of your basic salary, which would be exempted from your taxable income. Plus, you have the option of additionally contributing under your individual capacity and gaining a tax benefit of up to 50,000 rupees. Under the individual NPS, you can invest as much as you want to, but the tax benefit would be capped to 50,000 only. So this is what the tax benefits or the great tax benefit that NPS offers, which is over and above the ATC limit. Now, another main question that often people ask, or what often there is a lot of uncertainty, is on the withdrawal or the maturity part under NPS. Okay, so I'll just today quickly cover the taxation benefit, which the taxation benefit that the employee or the subscribers can get during their maturity under NPS, and what are the withdrawal options that the subscribers have. So first, I'll talk about the lock-in period that is there in NPS. So the lock-in period in NPS is either 10 years or your superannuation age, whichever comes early. This basically means, for example, if there is a subscriber who has opened his or her NPS account and that subscriber is aged at 30 years, and if that subscriber has opened the account today at 30, so and he has started investing. He's kept on investing, and at 40, after completion of 10 years, at 40 years of age, if the same employee or the same subscriber feels that he or she is no longer interested in the account, and he or she wants to close the account, that subscriber can close the account, but it would be considered as a premature exit because the subscriber has not attained the superannuation age. Now, in this scenario, under the premature exit, after completion of 10 years, yes, you can withdraw the amount or you can close the account, but it would be considered as a premature exit. So, under the premature exit system, whatever corpus that you have accumulated in this entire 10 years, 20% of that would be given to you straight away at one go. The rest 80% would be in the account, and it would grow according to the investment approaches that the subscriber has done. And at your superannuation or your retirement age, that 80% would be given to you as annuities, which is pensions. Now that is the premature exit scenario or premature exit system that happens. Now, how can you get your money out on your maturity or on your superannuation age? So on your superannuation age, which is at 60, let's take an example as the maturity age at 60. Now at 60, you have the option of either closing your NPS account at the age of 60 or keep on continuing and contributing till the age of 70. You have the option of choosing that at your retirement. So for example, if the subscriber chooses to do the normal withdrawal at 60, whatever corpus that the subscriber would have, whatever amount that the subscriber would have in the NPS account, 60% of that the subscriber has the opportunity to take it out at one go during retirement. The rest 40% gets invested back into the annuity markets, and the subscriber would get pensions on that once the retirement is done. Okay. Now I'll just quickly talk about the 60% part, which is the entire 60% that the subscribers can take out during the retirement would be absolutely tax free. So supposingly I have an NPS account and I'm retiring today, and I have a corpus of 10 lakhs. Out of that 10 lakhs, today I have the option or the opportunity to withdraw 60%, and the 60% that I withdraw would be completely tax free. There would be no tax that would be charged on that. The rest 40%, it compulsorily gets invested back into the annuity markets, and once the subscriber retires, the subscriber would start getting pensions on that. Again, the frequency of the pension would be entirely up to the subscriber to select whether he or she wants it on a monthly basis, on a quarterly basis, on a half yearly basis, or on a yearly basis. That is for the 40% part. Now, if there is a subscriber who has joined NPS late, supposedly at 56 or 57, and if the subscriber wishes to withdraw the amount at 60 years of age, and if the corpus of that subscriber has not gone beyond 2 lakhs, that subscriber has the opportunity to withdraw the entire lump sum of money at one go without any taxes being deducted. The given condition is the amount or the corpus should not go beyond 2 lakhs. It should be under 2 lakhs. So this is how the premature exit and the exit on withdrawal on exit on maturity works under the NPS scheme. So if I have to summarize NPS, what does NPS give you? So today, for example, if I want to open an NPS account, and if I want to know what NPS gives you, I can summarize NPS by stating that NPS gives you an opportunity to invest into NPS gives you an opportunity to avail tax benefits till the time you're investing into NPS, and the tax benefits that an subscriber can enjoy would be over and above the ATC limit. Supposingly, let's take a small example to make you understand how are the how tax benefit, how good this product is in terms of saving taxes. Let's assume that you come under the 30% tax bracket and you've already exhausted your ATC basket of 1,50,000, which we all have. Now you open an individual NPS account, you invest a lump sum of 50,000 into NPS, which automatically means once you have invested, your 50,000 rupees would be reduced from your taxable salary, so from your taxable income, which basically means 15,000 in absolute value you have not paid taxes, or you have reduced your tax liability by 15,000. How does that happen? Because you come under 30% tax bracket, and 30% of 50,000 is 15,000 rupees in an absolute value you have not paid taxes to the government. So that is the first benefit that NPS offers. Till the time a subscriber is investing into NPS, the subscriber avails exclusive tax benefits which are over and above the ATC limit. The second tax benefit is a subscriber would get the second tax benefit is the subscriber would get or the corpus would be accumulated till the time he's investing, because the product or the structure is designed in such a way that the subscribers cannot withdraw or exit the account before 10 years. Post that, the third thing is a corpus, again like the corpus is getting accumulated at 60, you have the option or you have the opportunity to get 60% of your entire corpus as tax-free withdrawal. So that is how beneficial NPS is. Again, if there's a question that has come, is please add illustration example for a person with 25 lakhs and 1.5 lakh tax covered with ATC. Okay, it's actually a very good question that has come. So what we can actually do is, under our website and in www.hdfcsec.com, we have a NPS calculator wherein our customers can log into that calculator, can also do a permutation and combination to actually get an idea what would be the tax benefit that the employee or the subscribers can enjoy under the NPS scheme. That is it from my side, everyone. Again, thank you very much for taking out your valuable time and attending the webinar today. We'll keep you posted for the next webinars under our website. Thank you everyone, and have a great day.